Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our FXcast Market Analysis trading plan. In each of our videos, we try to identify high probability trading setups. We'll evaluate the gold chart to see if there's any leading sentiment. We will create a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see if there are any releases that could affect our open and new trades. As always, please send your comments and feedback to analysis@fxcast.com. As usual, we are starting off with the gold chart. We can see that we are continuing to make that assertion. Gold is still getting the flight play where people are coming out of the dollar, going into gold, coming out of a lot of currencies and really going into gold. So it's still moving up. We got a little breathing period, but it's continuing to move. So you have to continue to watch it. And even though we had this several days of consolidation on our hourly, we can see that we have moved up here at the end of the day, possibly consolidating again here as we get into the new trading session. But overall, gold is strong, even as it is in the overbought category. So a strong gold means probably a weak dollar. Weak dollar means our GP, our pound dollar pair is going to be strong, and that's what we see here. Now, what's interesting about this and where we stopped today is if you slide on over, you can see the wicks. So you can kind of see this is where that last swing high was, a little wick here, and that's exactly where we are right now. So this may be a point of resistance. That means that's where sellers in the past have found value and pushed it down. Even our wickedness here, again, sellers in this 1.64 range to 6.5 range are finding value and pushing down. But again, we have a weak dollar, and there's even there's not going to be any certainty about the dollar until they make a decision about the debt ceiling. It has to happen by August 2nd, and at this rate, it probably won't happen until August 2nd. So we can see as we come over to our hourly, clearly in a sell zone, clearly way away for our long-term moving average. But this is an example of just because we're in a sell zone doesn't mean we're going down. Just because we're away from the long-term moving average doesn't mean we're going to pull back to it. What we told you to do yesterday was to mark the high, mark the low, and trade it. And we broke the high, and we haven't looked back. So you have to start watching these periods of consolidation. This was also a part of our low volatility watch list. We can see that the dollar is still underneath, so the pound is still in control. We can see that the dollar is averaging down, the pound is averaging up. We got that divergence, and as soon as we got that divergence, that's when we really took off. And of late, our probability indicators in the middle not really giving us either signal. But the most dominant and most important thing is who's in control? The pound. As we switch over to the euro dollar, we're going to see a similar thing. We can scroll over just a little bit, see our little wicks here, grab our horizontal tool, plop it in there, and that's basically right where we are right now. Again, this is a place where, although the dollar is weak, we may need another catalyst to get us into a new auction area. Right now, we're in this really big auction area of about 1.45 down to about 1.412. There's this very big range that we're in, and we may need a little bit more catalyst to get us above this. So again, obviously we're in a sell zone, well off our long-term moving average, but the euro's in control. Dollar averaging down, euro averaging up. So that's all we have to watch. What's going to be our catalyst? We're at a resistance point, just like the pound dollar, but as long as the dollar's in control, as long as the euro is in control, we can continue to see this pair move higher. Finally, if those pairs are moving higher, then our dollar franc is going to continue moving lower. And that's exactly what we're seeing right now. We can see that the franc is in control. We can see just the opposite. Even though we're clearly in a buy area, Even though we're clearly below the long-term moving average, that doesn't mean we're absolutely going to positively move higher. Um, the franc is going to stay in control. Same thing, franc averaging higher, dollar averaging lower. So again, what you have to watch over these, possibly for another week, is what's going to be our catalyst. Um, are we going to get a decision? If we're going to get a deal about the debt ceiling, what's going to be a catalyst to get us to move higher or move lower as far as the dollar is concerned? As we come to our watch list, we will be watching the dollar franc for our low volatility watch list, and we have nothing right now for our inside bar watch list. Let's go to the economic calendar. As we look at our economic calendar, the thing that really jumps out at me is two things. We have the European Union with the money supply, so that could certainly move the market one way or the other. And down the bottom, we have New Zealand and their monetary rate meeting, so that could move the market. Um, Leading indicator for the Swiss could also be impactful since we're watching the dollar franc there. But overall, the three things there again will be the money supply, the RBNZ announcement, and the Swiss leading indicators. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.